Good afternoon and welcome to the MEDIAZEST PLC half-year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and I would now like to hand you over to CEO Jeff Robertson. Good morning to you.
Good morning. Thank you very much. Thank you for joining us, everybody. So, as I said, my name is Jeff Robertson. I'm the CEO of MEDIAZEST. This morning, I'm just going to give a very quick overview of the company for those of you who may not be familiar with us, and also talk about our interim results for the 6 months ended 31st of March 2024, which we recently announced a couple of weeks ago. Disclaimer there, this presentation will be online after the call, so if anyone wants to read that. First of all, board of directors, we're a relatively small team, so it's myself, Lance O'Neill, who's non-exec chairman, James Abdo, who's our non-exec director. We've all been with the team for quite some time, lots of experience around the markets and also around audiovisual, digital signage. The business proposition for the company is that we deliver turnkey audiovisual solutions for our clients. We generate revenue in a couple of ways. So the first is from project fees, so that will be providing hardware and software for our clients and installing them on their premises, and all the professional fees around that, commissioning, project management, etc. The second way is we generate ongoing recurring revenue streams from service and maintenance contracts. That can include things like content management or content hosting, but also repair and maintenance if there's a problem with a solution that we've installed. Sort of overview of more of what we do and who we do it for. We think of ourselves as a creative audiovisual solutions provider. So a lot of our business comes from the sort of more standard day-to-day rollout, but actually what we've got in the locker that I think differentiates us from our competition a little bit is that we will go the extra mile and come up with creative solutions that people haven't seen before. So we often talk about bringing the wow factor. That particularly sets us aside when it comes to designing new stores, new propositions, new ways of doing business. So one of the appealing things about working with us for our agency partners and our end clients is that we'll go the extra mile and design for them a unique solution that maybe they've not seen before. We'll take that on. And that's proved very successful in winning new business for us. We provide our clients with an end-to-end integrated service. So a lot of what we do is quite complex. It will touch very different parts of a business. So to give you an example with that, with a retailer, we may well be talking to the store format design team. We may be talking to marketing. We'll almost certainly be talking to IT. Certainly what we do will go across the desk of finance. So lots of different stakeholders that all need information around what solution we're providing, need to understand how we're doing it. Health and safety comes into it, obviously very important. So one of the things that we do, because we can offer that end-to-end integrated services, again, we can stand out from the crowd and differentiate ourselves to potential customers and clients. We primarily deliver digital signage, so innovation and digital signage is what we're really known for, but also audio-visual systems around that. So audio in particular is an area we've worked in for nearly 50 years now. And again, we've got a huge reputation in that. In terms of the markets that we target, so our three core areas, and we do work a little bit outside them, but the three core are retail, automotive, particularly automotive showrooms, and corporate office spaces. In terms of experience, so MEDIAZEST was founded in 2004, floated in 2005, and one of the first things that the directors did was they acquired an audiovisual installation business, so to be able to really credibly deliver the solutions that we talk about, which was originally called Touch Vision, and that company's been going for 49 years. So we've got a real core competency in what we do. There's a lot of stuff that we've seen over the years, a lot of things we've worked out what doesn't work. Again, that gives potential clients and our existing clients a lot of comfort that we can really deliver for them. In terms of our strategy, so one of the pillars of our ongoing strategy is to improve the visibility, performance, and the value of the business by focusing on long-term contractual revenues and on clients that generate repeat business. So that could be clients with long-term opportunities where they might need us again and again in the same area, or to deploy solutions across multiple sites. Obviously, retail and automotive retail really fits that bracket well. We've got a very diversified client base in different sectors. So one of the things that, again, we set ourselves aside maybe from some of our competitors is that we have a real spread of clients. There's no one big client we're dependent on. We've got lots of different clients in lots of different markets. So that means if one's up and one's down, that's fine. We can balance that out. Innovation in audiovisual is a common thread throughout it all, and that core competence in delivery. Another area that we sort of differentiate from our competitors a little bit is sort of thought leadership around data and around collecting data from what we do and understanding how it's working for our clients and trying to help them make it better. So that could be in a retail store, something as simple as measuring when a touchscreen is being used. It could be sensors that can tell when someone's attracted to come over to display. It could be looking at the audience we bring into a certain store, depending on what content we show. So lots of different ways we do that. We use lots of different technologies from the sort of Internet of Things, big data area spaces to bring to our system. So again, it's very unusual. Not a lot of people do it. It's kind of an evolving art, if you like. Again, great way to differentiate ourselves. And also it means that when we're pitching to our clients, we're not just pitching to sell them the solution, we're also going to tell them why they should have it, whether it works or not, and how we can improve it moving forward. And we work all across the world. We're based primarily in the UK, and we work mostly around the UK and Europe, but we do work further afield for some of our clients. Recent work including Spain, Netherlands, Ireland, Germany, Slovakia, and the US. We established a Dutch subsidiary in late December 2022, and the idea with that was post-Brexit to enable us to deliver better for our European clients. And that's been a great success so far. So we've already built considerable amount of business and projects through that subsidiary, and we expect more to come. In terms of the market opportunity, what sort of size of market are we talking about? We believe there's a significant opportunity here to build a leading digital signage business with international reach. There isn't really a competitor that does that. There's several people trying to do it like ourselves, but we think there's an opportunity there to really lead that. There's a huge addressable market here in terms of the overall audiovisual market. So that would be all the sectors that we work in. That's expected to increase by 113 billion over the next 5 years. And the global digital signage market, where we really do specialize and we really are at the cutting edge, that's estimated at about 27 billion in 2023, and that's expected to almost double to 46 billion by 2032. So the markets that we work in are, growing at a huge rate. There's a big opportunity to take advantage of that. In terms of the makeup of the market and our competitors, there's lots of relatively small skilled companies, but without sufficient access to capital or scale to meet that demand. So that gives us a big opportunity at MEDIAZEST, we believe, to become a consolidator in the market and really use that public listing to the best of our ability. A couple of things about some of the clients that we work with, a couple of examples. So projects and partners of ours. On the retail side, Pets at Home has been a client for over 5 years now. We work in over 100 of their stores. Lululemon, we started with in the UK nearly 10 years ago, and we've supplemented that with new stores in several European locations. So in the last financial year, and that's carried on into this financial year. The picture there is Arc'teryx in Covent Garden, if some of you may have been to that. That's their new flagship store there. It's a beautiful store, large LED wall behind, real premium Samsung product. And that's the first project we've delivered for them. And subsequent to that, in the second half of the year, we've delivered more sites for them in Berlin, Paris, and Munich. On the automotive side, Hyundai has been a great client of ours for the last 10 years. And we work across all of their dealer network. We work with Kia now in 3 European territories, and we're looking to grow that. We have a Porsche, very high-end dealership in Milan at a place called City Life, which is an absolutely beautiful store, as you'd imagine with Porsche. Superbly designed, real premium look and feel. It's a different approach to the car market. So again, it sort of shows a different element where the wow factor and our technological expertise can come in. We also see opportunities from the dealer groups. So some of the bigger dealer groups, they're ambitious as well, and they don't want to just wait to be told by the manufacturers what they would like them to do. So they're taking the lead as well, which is an interesting trend we're seeing. So we work a lot with Jardines, particularly in their Jaguar Land Rover dealerships, and in companies like Norton Way. And finally, one of our bigger sort of projects and our longest term relationships is Rockar. And we work with them first at Hyundai, actually in Bluewater. We currently support them at their Jaguar Land Rover dealership in Canary Wharf, which again, it's a beautiful store, real premium, slightly different approach to sort of the market than maybe Hyundai have, or maybe some of our other clients. In the corporate office space, We're really delivering things like meeting room deployments and booking systems. So yeah, post-COVID, obviously, we've all evolved to a slightly different way of working. Whether we're in the office 3 days a week, some people working from home, some people in the building, clients, maybe traveling less than they're used to. I think, there's a huge amount of change happened there. Using audio-visual systems to help manage that has become absolutely crucial to any business. Lots of businesses looking to downsize physical office space and obviously save money. Um, but to do that, you need the technology to be able to then manage multiple meetings and evolve those systems. And again, that's where our technical expertise really comes in. We're a Microsoft Teams accredited company, and that's super important at the moment. So that's really grown in the last few years. Obviously, Office 365 is getting take up more and more and more, and that includes Teams. It includes Teams. So a lot of companies going that route. Again, that deep expertise and credibility helps us to really win business in those areas. So a little bit about the interims. As we said, it's a much more positive first half performance compared to the prior year. Some of the long-term project rollouts that were delayed last year, they came through, and we continue to work with key customers, including Hyundai and Pets at Home, during the period. So really pleasing to see the return to year-on-year growth, which we expected, an improvement in the numbers across the board. We've completed work on more Lululemon stores, as we mentioned, and we continue to work with them across Europe. And I mentioned as well the Arc'teryx LED and the Covent Garden flagship, and again, working with them across Europe. So we see a big opportunity there. The fact that we can deliver in the UK for our clients, but also then keep that consistency and deliver the same look and feel and the same quality for them. That trust, credibility overseas, particularly across Europe, is hugely important. Having the subsidiary and being able to manage the logistics of that, um, again, is a real big selling point for us, and that's been terrific in the last 12 months. Post-period end, so new business wins, we mentioned in recent announcements in the Netherlands and Germany and France, all to be delivered in the second half of this financial year. We talked about some of the automotive clients we work with. One of those, with a follow-on contract already, which is it's around about, it's multi-years, it's nearly 3 years in another EU country, and we announced that in May 2024. And the real significance of that is it's growing again on the initial install we've done, so that's gone well, and then we're moving on. But also, it's helping us grow the recurring revenue streams over multiple years. So it gives us much better visibility moving out over the coming years as we start to really build up that part of the business. And again, again shows the benefit of the EU subsidiary and where that's really worked well for us. Second half of the year, very much aiming to build on the progress in the first half of the year and generate positive growth organically. And obviously, we're still targeting a return to profitability for the full financial year. The second half of the year started well, as we said in the interims, which is really encouraging. Typically, as well, if you look back into our results, first half of the year is generally not as good as the second half of the year, and the reason for that is that obviously we work considerably in retail, and December because of Christmas and January because of sales. 2 months that generally people don't want us in their stores, so they tend to be very, very quiet months for us. So naturally, the second half of the year, as they're gearing up to the next sort of golden quarter phase from the retail side in particular, naturally becomes a much better time for us. So the moving on to the unaudited interim results for the 6 months ending 31st of March. So financially, revenue was up 11%, gross profit up 17%. So really pleasing to see the increase in the numbers and coming back to a better level. Gross margins improved slightly as well. So our focus on professional services, that credibility I talked about, and that ability to deliver for our clients. It's not just about hardware, the tin. It's really about how you put this stuff together and how you deliver it and how you improve on it, how you get the content to work better. That all helps us drive those margins. The EBITDA improved significantly, so a much smaller loss. Obviously, we would like to get that to be positive, and a much smaller loss after tax, obviously, accordingly. And that's obviously reflected in the loss per share. Cash position was very similar to last year. Naturally, obviously, as we see second half of the year, we expect improvements in that as well. So just finishing on sort of outlook in terms of the target, very much targeting year-on-year growth and return to profitability for FY24 and beyond that. As I mentioned, we're AIM listed. We are a creative audiovisual provider to lots of top brands, and that spread of the different brands we work with, as I said, gives us a lot of comfort over the fact if one or two of them aren't doing much at a certain time, we'll be working with the others. Lots of long-term blue chip clients. The recurring revenue pretty stable around 700,000 again at the moment. We're looking to grow that in the second half of the year. Strong long-term demand in all three core sectors, and I think that's been the real difference in FY24. I think obviously FY23 had some challenges in the market and in the the global marketplace, the macroeconomic side of it. But what we are seeing in 24 is people really pushing on and adoption of what we do, what we deliver in all the sectors in which we work. So as recently as sort of 3 or 4 years ago, we'd be having conversations about what is digital signage and why would I use it in my business? And those conversations are gone. We're now talking about how best can we deliver that for our customers. And that's reflected in the market opportunity we talked about already. I've mentioned before, so new business wins, including Netherlands, Germany, and France. We're really pleased with the way that the European subsidiary has started, and we see lots of big potential there. And the fact that we've got that combined with our UK business is a really big selling point to our clients. We talked a bit about the potential for a buy and build acquisition. We've been really focusing on organic growth because it's been so busy the last few months, but we still are looking at opportunities in that area. We think that's got a real long-term goal, but we are very, very focused on only doing the right deal at the right time. So last year's results reflect the fact we looked at one opportunity in particular. When we came to due diligence, we realized that it wasn't going to be a deal we can make work for both parties. We very much believe don't do a deal for deal's sake. So, we need to maintain, the investment proposition. So we pulled away from that. We took some pain last year on the numbers because of that, but we believe that was the right thing to do. However, the strategy is sound and there will be more opportunities coming, we're sure in that. And we continue to look at that area. And finally, we're confident in our ability to deliver year-on-year growth alongside targeting that return to profitability. So that's it from me. Thank you very much for your time. Thank you for listening and your interest in MediaZest, and I'll look forward to your questions.
Perfect, Jeff. Thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Jeff, as you can see, we have received a number of pre-submitted and live questions throughout today's presentation. And if I may now hand back to you and kindly ask you to read out the questions where appropriate to do so, and I'll pick up from you at the end.
Yes, sure. Absolutely. Thank you. Yes, so thank you for the questions. That's great. So let's start at the top. How much does it cost to list on the AIM market every year? Always think it's hard work for such a tiny company to do this like MediaZest. Yeah, I think that's a really good point, really good question. In terms of cost, it will depend on what we're doing in the year. So one of the costs obviously will be legal fees. So last year, due diligence and legal fees for the aborted transaction, that had an impact. I would say sort of core costs is probably around about 350, 400,000 a year, which is significant for a company of our size, and it's hard work for a small company to do that. On the flip side of it, what it does give us is that opportunity to go out and to do that buy and build strategy. I think the visibility we're getting from more recurring revenue streams is going to help us hopefully deliver more consistent numbers, which I think will help us. And obviously, that was difficult to do last year. Also, with the AIM costs, they're pretty consistent. So even at 2-3 million, it's still a reasonably large amount of it's a large percentage of turnover. But actually, if we get to 5-10 million pretty quickly, then I don't think those costs would go up very much, and it become obviously a lot less significant term in terms of our cost base. So we think that it is hard work. We're committed to it. We think it gives us an opportunity for the buy and build, and we think that that's really going to be very exciting in the next sort of 2-3 years. So thank you for that. Second question, where do you see the balance between turnover in the EU setup and the UK being in the next year or two? Another good question. I think we've been really pleased with how the first year of the EU subsidiary started, and I think we're building momentum there as well. So I think that's definitely very exciting. In terms of the balance, I would say at the moment, probably at least 3/4 of business is still in the UK, but I think that will change quite rapidly, and I can certainly see a situation where we're sort of 50-50 UK and EU rest of the world coming up pretty soon. But yeah, there's a lot of opportunity out there. I think I mentioned it in the presentation. I think one of the things that our clients really like is that they can come to us and we can deliver for them across Europe. So we can, irrespective of post-Brexit, we've got the systems and the solutions in place that we can consistently give them in their shops, whether it's in London or Berlin, the same experience for their customers, and that's super important. Next question, when do you see the group becoming cash generative? So the group wasn't cash generative last year, but it was the year before. And the year before that, I think we were EBITDA positive as well. So yeah, we're looking to get back to that obviously as soon as possible, but we have already been that. Just last year was a difficult year. I think we talked about on previous presentations. Please do feel free to have a look in more detail there. But really delays to projects and obviously additional costs coming from the acquisition we looked at is the story of last year. The flip side of that, of course, is those projects are now starting and we're really starting to see that growth in FY24 and beyond. What are the most likely takeover targets? So difficult to name names, and I don't think that would be appropriate on this sort of presentation. But again, a good question. I think we're looking at companies sort of a little bit smaller than us, maybe where they've got 3 or 4, maybe even less sometimes. So a lot of these companies that have got one big client, where they may look after them to really deep level, really have great relationships there, but maybe haven't got the ability to grow and they're focused very much on that. We can give them that platform at MEDIAZEST where they can come join us and we can build together on that. So I think it's looking at targets, where that sort of there's a fit there. So like-minded people, like-minded clients. Also those sort of small companies maybe where the EU is a good opportunity where maybe they haven't got that reach that we have, and actually by coming on board with us, there's an attraction there to take their business to the next level together. So I think that's a sort of area we're looking at. We think very much still in the AV sphere, really focusing on what we do. We know that market. We know it's right for growth. We know there's lots of fragmented small companies, and we're one of the very few with that access to capital to be able to do that buy and build strategy. So next question, with a target of return to profitability by the end of the year, what milestones or benchmarks need to be achieved to meet this? So that's a very good question, and one of the challenges that we have as directors in particular is that a lot of the work we do is in new builds or refurbishments or new stores that have been taken over with new leases. And if any of you work in any of those spheres, you'll know that when you get building works involved and leases and timescales can shift very quickly on you. So, for example, if we have a big project in the end of September and it shifts 2 weeks into October, that can have a big difference to the year. So, really, for us, that target and return to profitability is really getting back on with the flow of the deals coming through, with the investment we made last year in marketing, and we've continued with that, and new salespeople. It's really trying to grow on that and grow on the opportunity that we see now as the markets in all the spheres in which we work are really taking off. How are you leveraging new innovations to stay ahead in what seems a competitive market? So again, a really good question, and actually a question that we could quite often get from our customers is how do we future-proof it? And the honest answer to that is that actually, even in the technology that we use, it doesn't change that much year on year. So a lot of times we'll be looking at clients with a project that maybe is to put a solution in that will last in a store between 3 and 5 years. And actually, the difference between the start and end of that project in terms of new technologies won't generally be that much. What we are seeing is LED, so big LED walls. You've probably seen these in terms of in retail stores. I think a couple of photos that I've showed today, but also out of home. So the roadside advertising, the super high bright pixel-based screen. They're getting cheaper and cheaper and better quality. So we're seeing that come through. In terms of how we actually keep on top of it ourselves, so one of the things that we do is have really good relationships with the manufacturers. So that'll be your Samsungs, your Philips, your NECs, your LGs of this world, and we'll work very closely with them. And they always want to come to us with new innovations, with anything new they're coming out within the market, and they'll generally give us quite a runway on that, so that they might release a product next year that we've seen this year with them, and it's on their roadmap. So what that means is that we can help our clients plan for that, help them understand how the market might shift, and make sure the solutions that we put in, really do, are fit for purpose and really do sort of last the lifetime they expect. I think one of the one of the things that I've been taken by surprise, even from my side, some of the stuff we've put in, we've got clients with kit we put in 10 years ago that still works perfectly. That is, that still looks stunning. That's just taken, yeah, it's just worked brilliantly. They've invested in the right kit. We've put the solution together really well. And actually, it's still there because the market hasn't moved on that much that it needs to change. And if they did it again today, it would probably be slightly different, but it's not that big a difference that there's a problem. But it's a really good question, and I think that future proofing, it's quite often something we talk about in a sort of pitch to a new client. Next question, sorry. What are the current sector EBITDA multiples you're seeing for M&A? It's a bit tricky to see because a lot of these are small companies and private held companies, so that information isn't always available. When we hear people talk about it, they sort of talk about 5 to 10. Sometimes that's when they're talking to us, so I'm sure they're going to talk that up. I think probably, yeah, that's a difficult question to answer without public sector information, and because we are pretty much the only one of our competitors who are listed, there's no one else with that information out there. What we are doing is seeing in the market there is consolidation going on, and we have seen that over recent years, where businesses such as ours have been targeted by bigger marketing companies. So obviously, if we can build a bigger business and an exciting business, then I don't see any reason why MEDIAZEST wouldn't be a target in the future. And one more question, I think. Are you looking at any new technologies? How much cross-selling is there once you're in a client, sell them different tech, once you've sold them one project? I guess that ties into the question we just had. Yes, so in terms of new technologies, we're always looking around. I think in terms of the market, the LED innovation is probably the biggest change we've seen in the last 3 to 5 years, and it's been coming for 3 to 5 years. So I don't see anything hugely different that will come through the next sort of year or two. I think a lot of what clients are doing is understanding they can use digital signage and the power of it and how it can really help their businesses, and that's what they're looking at. So they're looking less, I guess, at new tech, but more at how they use tech that is existing and how they really make it work for them. And we've also gone through a phase where I think people have maybe sort of done things a little bit, not really given it too much thought and just put something on the wall, let's see what happens. And now they're understanding that there's a real skill to what we do here, understanding how it combines with content, how it combines with other things going on in the store or the dealership, how it all has to link in. So I think that side of it, rather than new technologies, is where clients are looking at the minute. The second part of the question was about cross-selling. So I think once we're in, talking to a client, I think we generally quite quickly establish a good rapport. As I mentioned, there's lots of different stakeholders. So getting to know the client, understanding how they work, and understanding what they want from you, and where you can really help them deliver their strategy is really, really important. And that gives us opportunities to cross-sell, absolutely. We've got quite a few examples where we might work with a client on the retail side of it, and then they'll say, actually, our offices need a bit of an upgrade because the meeting rooms don't work, and can you come in and sort those? So that definitely can happen. But also, we're obviously looking for opportunities as we go. I think the investment we've made in the last 12 months, again, I touched on it a little bit earlier, but in the sales and marketing side of it, and particularly in the sales side, means that we're able to talk to our clients on a more regular basis to give them a better service, but also to look for more of those opportunities. And obviously, the great thing about existing clients is they know we can deliver for them. They understand the credibility. They've got that trust and confidence in us. So it makes that selling process a little bit easier.
Perfect. That's great, Jeff. I believe you have addressed all those questions on the Q&A tab. And of course, the company can review all questions submitted today, and we will publish those responses on the Investor Meet Company platform. But Jeff, before redirecting investors to provide you with their feedback, which I know is particularly important to the company, could I please ask you for a few closing comments?
Just thank you very much for your time, really. We're very excited about, the improvement we're seeing in FY24. As I said, the first 6 months, big improvement, more to come. Second half of the year started well. We've got lots of great clients. We're very lucky, the clients that we get to work with. They've got ambition and they've got some great projects going on, and we're looking forward to working for them, serving them, and also, growing the business in the coming years.
Perfect, Jeff. Thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of MEDIAZEST PLC, We'd like to thank you for attending today's presentation, and good morning to you all.